Dear viewers, are you a person who believes that you should keep money in the bank fixed deposits? Are you a person who has already built a large enough bank fixed deposits? In this episode, I'm going to examine the fixed deposits that you have kept in the bank. Are they working in favor of you or they are working against you? Make sure you watch this episode till the end of this video to get all perspectives of this issue and take an informed decision to continue a fixed deposit or to channelize this money to some other investment which works in favor of you. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, I don't have to talk about the fixed deposits kept in the bank. Who doesn't know about the fixed deposit? Who doesn't want to maintain money in a bank fixed deposit? If you have maintained fat bank balances, that's something which is normally expected of any individual who has saved money. There is nothing new about it. But I am going to make you think today. Should you be keeping this money in the fixed deposits or not? When you keep money in the fixed deposits, what is that it is going to happen? And what is the reason for which you have kept money in the fixed deposit? And whether the banks are really living up to that particular expectation and every aspect of this story. Let me first examine point by point why you have maintained fixed deposits in the bank or you have maintained cash balances in the bank. The reason number one, this is going to be a money on call. That means I have saved the money, I have kept it with the bank. If I need money immediately, I can liquidate my fixed deposit. I can take an overdraft against it. I can keep it as a collateral and get money out of it, or I can just liquidate whatever that I have. To that extent, the money on call is something which is working in favor of you when you keep money in the bank. The second aspect is the money should retain the purchasing power. Instead of keeping money in the bank, you have an option to keep the currency at home and don't go to bank at all. If you do that, what happens? When you do this, the money that you have kept at your house, the physical currency, will lose its purchasing power over a period of time because of rise in prices or rise in inflation, in other words. So to maintain the purchasing power of your money, that is the reason you maintain the bank balances or keep your money in the bank fixed deposit. The third reason why you maintain fixed deposits is everybody wants safety for their saved money. Which other instrument can live up to the same expectation as a bank fixed deposit? You think the money that you have kept in the bank, it remains safe and it will not get eroded by the death of the institution, or you have lent money to the bank refusing to pay back the money is a remote possibility. So these are the three reasons why you maintain fixed deposits in a bank: money on call, safety of your money, and the purchasing power. Now let us examine the reasons why I have kept the money in the fixed deposit, whether the banks really live up to that particular expectation. The reason number one why you kept money in the bank is because money on call. That means I need money, I can take out this money from the bank. This is one aspect. Bank will live up to the expectations. If you have kept in the fixed deposit, you can liquidate this fixed deposit, or you can take a loan against this fixed deposit, keeping this fixed deposits as the collateral, and money will be made available to you on call. No doubts on that. That is where they really score over any other instruments probably. Look at the other aspect of it. The reason is retaining the purchase power of your money. You could have kept this money at your home, but instead you deposit in the bank because nobody should steal this money away from you. At the same time, the money goes through an erosion of purchase power because of rise in prices over a period of time. That is why you have kept this money in the bank fixed deposit. Now, does the bank FDs really retain the purchasing power? In theory, the bank fixed deposits must retain the purchasing power, but that's in theory. In practical terms, does it really happen? The answer is maybe yes, maybe no, Most of the time, yes, there are countless periods of time where they have not lived up to the expectation. Normally speaking, the bank fixed deposit rates should be 1 to 2% above the inflation rate. That means if the inflation is 5%, the bank fixed deposit rate has to be 6% or 7%. Only then you can say that the bank fixed deposits are retaining the purchase power of the money. But does it really happen? Look at different parts of the world today. In US today, the inflation is in the range of 9%. In the Eurozone, the inflation is somewhere around 8 to 11%. And where are the fixed deposit rates of these banks? Today they may be just below 4% or maybe 3%. And for a long period of time, inflation was somewhere in the range of 2% and the bank FD rates was in the 0%. Look at the case of India now. Between 2010 and 2014, you can do a Google search for what is the inflation that was prevailing in India at that point of time. The inflation on ground was somewhere between 10 to 13%, whereas your bank FDs gave you a maximum FD rate of 9 to 9.5% during that particular period of time, which means to say keeping money in the bank during these phases literally erode the purchasing power of your money. Yes, make no mistake. Yes, if you have kept money in the bank, fixed deposits during this particular phase, you did nothing wrong. Neither the banks did anything wrong because the FD rates remained so low that the fixed deposits eroded your wealth or they eroded the purchasing power of the money. The third reason you have kept money in the bank is for the reason of safety of your money. Is the money that you have kept in the bank, is it safe? I would say it is relatively safe, but can you say it is 100% safe? No, it is not 100% safe. There are risks which can get built into it. If the institution collapses, then probability of you getting that particular money is very, very less. As a small investor, probably the regulators intervene and you get that money fairly quickly. But if you are a high net worth individual or if you have maintained a good amount of money in the bank today, then probably you could be standing last in the queue to receive the money. The insurance of bank deposits is too small a money on which you can count upon. If by and large, if you say that I have kept money in the large bank, be it the private sector bank or the public sector bank, your money is safe. If you have kept money in a PSU bank, because the government is behind it, you may say that the monies are that you have kept in the bank is quite safe. But do not count that the money that you have kept in the bank is 100% safe. If you have kept money in lesser known smaller banks or in the cooperative bank, there is a risk that you may lose that particular money. So on three conditions you kept money in the bank: money on call, which is 100% met, whereas the other two aspects of it, the safety of your capital as well as the retaining the purchasing power of the money, that is not happening as you thought about it. It's a belief that you had, but on ground the reality is something against it. While I talked about the risks which are built into your bank fixed deposits, this is mostly generalized in nature, may not play out all the time. But what is the real risk of maintaining fixed deposits in the banks? The real risks are two. Number one, which is not discussed much, is the risk of reinvestment. When you keep money in a bank fixed deposit, you lock in for 1 year, 2 year, 3 year, or for a maximum period of 10 years. What happens after 10th year? Your fixed deposits will mature and they have to be reinvested. When you reinvest, you have to reinvest this monies at the prevailing interest rate. If the interest rate on that day, if it is higher than the interest rate what you have booked your FD today, it works in favor of you. But what if the bank fixed deposit rates are lower than what it is today? Then you have a real reinvestment risk to lock in your money for a further period in the bank fixed deposits. What does the history say about the bank interest rate? If you look at the Indian scenario, way back in the 1980s and the early 90s, the bank fixed deposit was in the range of 14 to 15%. Yes, the younger generation of today does not know that the Indian bank fixed deposit rates were at that level in the 80s and the early 90s. But subsequently, after 1995, the bank fixed deposit rates started cooling off and dropped to somewhere around 5.5% by the year 2007. But after that, it went through one small upcycle which took the bank FD rates up to 9.5%, and a downward cycle started. This time around, the bank fixed deposit rates dropped to as low as 4.5%. As I speak, we are going through an upcycle in the interest rate cycle. This will probably peak out in next 1.5 years maximum, and the downward journey again starts. So in any developed country or in a developing country, as the economies develop, it's quite obvious that the interest rates will keep falling down towards zero. So what do you think will happen in India? Where will the interest rates settle down in India in next 5 to 10 years in your opinion? I'm listening to you. I would like to hear your comments. Leave your comment section below. Where will the Indian interest rates be 5 to 10 years from now? The second major risk of keeping money in your bank fixed deposit is the risk of eroding your wealth, and it plays out day in and day out if you are a high net worth individual. For a small timer who maintains very small amounts of money and he is not in any tax bracket, then probably it will not work like an erosion of capital for him. But if you are a high net worth individual, if you are in a tax bracket of let's say 20% and above, make no mistake, day in and day out, the banks are eroding your wealth. How did I make this particular comment? Why do I say it is eroding your wealth? As I already mentioned to you, the bank fixed deposit rates have to be higher than the inflation rate. Many times that will not be the case. So at the interest rate level itself, it is eroding your wealth. But if you are a taxpayer, the bank interest rates that you derive comes under the income tax. That means let's say you have booked an FD for 10 long years. You don't physically take out that interest, so you allow the interest to get accumulated. But when you file your tax return, the bank will give you a certificate telling that this is the interest that you have earned for that particular year, and that is added to your income. If you are in a 20%, 30% or the maximum tax bracket, whatever the interest that you earn, the 20, 10, 20 or 30% or whatever is your appropriate tax bracket, so much of money has to be paid to the government as an income. Now let us examine a case. You have kept a lakh of rupee in the bank. The inflation for this particular is 5%. And the bank FD rate is 6%, 1% above the inflation rate. That means to say, in 1 year, you will get 6,000 rupees as the bank interest. If you are in a tax bracket of 30%, that means to say, out of the 6,000 rupees what you get from the bank interest, 30% of that will go out as taxes. 6,000 minus 30%, that's 2,000. You are left with 4,000 rupees as something which gets added to your FD. The inflation was 5%. Post-tax returns came down to 4%. That means in spite of bank FD rates remaining well above the inflation rate, because of your taxation, you are left with less amount of money than what you had a year before. The 1 lakh what you had a year before, to adjust for the inflation, should be worth 1,05,000. But because you kept money in the bank, it is worth 1,04,000 because you paid taxes against that. So if you are a person who is in a tax bracket, not the 30%, even a 10 or 20% tax bracket too, the bank FDs, make no mistake, will erode your wealth. There was a time in the history of India where you didn't have anything else except to keep money other than in the bank. If you had money, you had to go and keep money in the bank. So that's what happened from 1947 till probably till 1990s. But from 1990s, the situation changed, and there are many instruments which are available for you to park your money. So when you didn't have an option, the only option that you had was either a bank fixed deposit, or alternatively, people used to park their money in a life insurance policy. But the situation today is something different. You have got the mutual funds, you have got the bonds, you have got the alternative investment, you have got a lot of other instruments where you can park your money other than the bank fixed deposits. So if you are a person who is not aware about these risks which are there in the bank fixed deposit, and you maintain fat bank balances by locking your money into bank fixed deposit, it's time you think about it. The bank fixed deposits are eroding your wealth. If you are an NRI who is watching this episode, probably you could say, I maintain my NRI fixed deposits and these are exempted from taxes. To that extent, my wealth is not getting eroded. You have a point, no doubt. As an NRI FD holder, you are not liable to pay income tax. The erosion which happens because of the taxation may not get applied in your case. But what if the bank fixed deposit rate itself is lower than the inflation? Then even in case of NRI fixed deposits, the chances of you eroding your wealth in a bank fixed deposit is very, very real. Plus for the NRIs, there is one another risk. You are exempted from paying income tax on the interest rates of the NRI FD as long as you become an NRI. There are very few people who permanently remain NRIs, seek citizenship of some other country, or become a permanent resident of another country for your lifetime. But for most of the people who are working as NRIs, a day will come where you come back and settle in India. At that point of time, the NRI FDs have to be converted back into the resident FDs and they will become taxable. So if you are a person who has maintained fixed deposits in the bank, it is a hanging sword on you. The bank fixed deposit, make no mistake, once you become taxable in India, will erode your wealth. If this is the case, am I admitting here that you should not keep fixed deposits in the bank at all? The answer to this question is no. I'm not suggesting you should not keep monies at all in the bank, but it should be evaluated properly. Let's look at when can you keep money in the fixed deposits. Number one, if you are a person who is not liable to pay any taxes, or if your income is below the threshold of income tax level, then probably you have a case where you can maintain decent amount of money in the banks. Likewise, if your time horizon is very short, let's say that you are parking your money for 3 months, 6 months, 1 year, 2 years, less than 3 years, there is a scope for you to keep money in the bank because any other instruments you look for will have the same income tax problem if you park it elsewhere. So if your time horizon is small, or if you are in the lower strata of the income tax slabs, then probably you can maintain monies in the bank fixed deposit. But if your time horizon is more than 3 years, if you are a person who is in a higher tax slab of 20%, 30%, then the bank FDs are not worth for you. You should look at the alternatives where you can keep this money with the same benefits of money on call, retaining the purchase power, and safety of your capital. And that's definitely possible. Dear viewers, now that you have understood the problems that are associated with the fixed deposit and how it can erode your wealth, it's time you take action and see where else this money can be parked. To do that, you have to seek professional help. All these days you have done things on your own. Probably you are not aware about where else you can park your money under professional care. If you are a person who is looking out for professional help, then you can make best use of our services as well. I'm a practitioner of finance. Countless families across globes have utilized our services to build their finances, to reach their life goals in a safe way, in a regulated space. So if you are the ones who is looking out for this help, you can send a WhatsApp message on the number that is shown here on the screen, and one of the financial guides, or maybe myself, could be the person who will help you to relocate this bank fixed deposit in proper places so that your monies will not go through an erosion process. So why delay then? Send that message now. Dear viewers, hope the video that I have done today helped you to understand the problems of maintaining the fixed deposit and how it can erode your wealth. If it did help you to understand the finer points associated with it, please like this video. If you are a person who is watching my channel for the first time, or if you are yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Don't forget to share these videos with your near and dear ones. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you next Friday with yet another topic very, very soon.
Press the bell icon for more details and subscribe our channel.